What if I told you that the first 10 minutes of the trading day could predict the entire trend? Stay with me, because this simple strategy has changed the way thousands of traders approach the market. I'm going to show you the opening range breakout strategy, one of the most powerful yet underutilized techniques in day trading. By the end of this video, you'll know exactly how to identify the opening range, when to enter a trade, and how to manage your risk. Before we dive deeper, if you're serious about learning day trading strategies, hit that subscribe button and turn on notifications so you don't miss future videos on technical analysis and trading strategies. Let's start with the basics. The opening range is simply the price range established during the first 10 minutes of the trading day. This period is crucial because it represents the initial battle between buyers and sellers after the market digests overnight news, pre-market action, and opening orders. Think of the opening range as a container. The top of this range represents early resistance, where sellers are stepping in. The bottom represents early support, where buyers are defending. These levels are formed by real money, real positions, and real conviction. Here's why this matters. Professional traders, institutions, and algorithms are all watching this same range. When price breaks out of this range with conviction, it often signals which side has won the opening battle, and that can set the tone for the entire trading session. But why does this work? It all comes down to market psychology and liquidity. During the first 10 minutes, the market is absorbing a flood of information. Traders are reacting to overnight news, economic reports, and global market movements. This creates volatility and establishes key levels. Once the opening range is established, traders who bought at the high are now underwater if price moves down, and those who sold at the low are losing if price moves up. When price breaks out of this range, it often triggers stop losses and forces traders to cover their positions, adding fuel to the move. Additionally, breakout traders are waiting on the sidelines. When they see a clear break, they jump in, creating momentum. This combination of forced covering and new momentum creates powerful trends. Quick question. Have you tried opening range breakout trading before? Drop a comment below and let me know your experience with this strategy. Now let's get into the mechanics. Here's exactly how to trade the opening range breakout. First, you need to identify your opening range. Set your chart to a 10-minute time frame and mark the high and low of the first candle that forms between 9:30 a.m. and 9:40 a.m. Eastern Time. These two levels are your breakout triggers. The high is your long trigger, and the low is your short trigger. Patience is key. Don't jump in during the first 10 minutes. Let the range establish itself. You're waiting for price to clearly break above the high or below the low. A true breakout should be decisive. I like to see the candle close outside the range, not just wick through it. This reduces false breakouts significantly. Risk management is everything. For a bullish breakout, place your stop loss just below the opening range low. For a bearish breakout, place it just above the opening range high. For profit targets, I use multiple approaches. Target 1. Use the height of the opening range projected from the breakout point. If the opening range is $2 tall, add $2 to the breakout high for your first target. Target 2. Use key technical levels like previous day's high or low, or significant support and resistance zones. Target 3. Trail your stop using a moving average or previous candle lows to let winners run. Let me save you some pain by covering the most common mistakes I see traders make with this strategy. Don't trade within the first 10 minutes. Let the range form. Jumping in too early leads to getting whipsawed by the opening volatility. Never trade without a stop loss. Hope is not a strategy. The opening range gives you a natural, logical stop loss level. Use it. You don't need to trade every opening range breakout. Be selective. Wait for clean setups with good risk-reward. Start small while you're learning. Risk no more than 1 to 2% of your account on any single trade. As you gain experience and consistency, you can gradually increase position size. Always check for earnings reports, FDA announcements, or major news events. These can create volatile, unpredictable price action that makes technical strategies less reliable. Let's recap the complete process so you can start applying this strategy tomorrow. 1. Wait for the first 10 minutes to complete. Mark the high and low of the opening range on your chart. 2. Identify which direction offers the better setup based on volume, market context, and daily chart structure. 3. Wait for a decisive break outside the range, preferably with strong volume and a closed candle. 4. Enter the trade using either the immediate breakout method or wait for a retest. 5. Place your stop loss just outside the opposite end of the opening range. 6. Set your profit targets using the measured move, key technical levels, or a trailing stop strategy. 7. Manage the trade. If the breakout fails and hits your stop, accept the loss and move on. If it works, scale out at targets or trail your stop to lock in profits. This strategy is simple, but simple doesn't mean easy. It requires discipline, patience, and proper risk management. You will have losing trades. That's guaranteed. But if you follow this system consistently, your winning trades should more than compensate for your losses. The opening range breakout is a time-tested strategy that works because it's based on sound market principles: support and resistance, volume and momentum. Professional traders use variations of this strategy every single day. Start by paper trading this setup. Watch the first 10 minutes unfold each morning. Mark your ranges. Track theoretical entries and exits. Build confidence before risking real capital. If you found this valuable, hit that subscribe and like button. Also turn on notifications. I post new trading strategies and market analysis every week. Drop a comment below and let me know what other strategies you want me to cover. Remember, trading is a marathon, not a sprint. Master one strategy at a time. The opening range breakout is a fantastic place to start. Thanks for watching, and I'll see you in the next video. Happy trading!